Today, is Kinesis a golden monetary path? Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Today I'm joined by Tom Coughlin from Kinesis. Hi Tom.
Hi, how are you?
Very good, and thanks very much for spending some time. Now, you're the CEO of Kinesis, and we're going to have a really interesting conversation today because really this is a conversation about the future of the monetary system, isn't it?
It is indeed. It is indeed.
Now, I guess a good place to start is just a little bit about you, because you come from a very interesting background, quite strongly connected to the gold community through ABX, but you had an interesting insight a few years ago, which has taken you into an additional direction too.
Yeah, sure. So I guess I come out of a financial services background, having built a financial services business and also a hedge fund as well. Whereby going back and rewinding back to 2008, 2009 days, we were looking to, position our clients into precious metals as a form of investment, like portfolio diversification, with everything going on in the world back in those days, which was the great financial crisis. Credit markets were seizing up. Counterparty risk was the name of the game back in those days, and you had banks falling over. So that led to basically looking to position our client investment portfolios in precious metals, and two, also take a position in the investment fund that we were operating and still are operating to this day. And you know, we looked at exchange-traded funds. We looked at other vehicles on the market, being certificates and warrants and those kind of products out there. And ultimately, we concluded that they were not representing what we were looking for from a precious metal investment, which was negligible counterparty risk. There were custodians in place, which were banks. There was layers of financial risk. So that then consequently led us into the physical markets and holding physical metal directly, like allocated title to us. So then you need to look at all these things like logistics and storage and insurance and these kind of things. It gets a little bit dirty when you start to sort of delve into the physical markets. And there wasn't really a facility out there that was appropriate for institutional levels of investment of precious metals, unless you wanted to face a bank, but then once again, you have the counterparty risk of a bank. So that's where the opportunity was identified, and that's really the reason why we embarked on this journey, going back into those days. And initially, it was just setting up a very basic facility to offer this investment to our financial advisory clients and into our hedge fund. And then it resulted in the building out of, in those days, it was Australian Bullion Exchange, which as we went global, consequently changed its name to be more descriptive of what we actually offered, being allocated bullion exchange, being legally allocated title in the name of the ultimate beneficial owner, the end holder of the metal. So that started a journey across the world of meeting all different kinds of market participants, and we worked our way up through the industry from, you know, the smaller dealers and trading houses, then onto the second tier bullion banks, the first tier bullion banks, so meeting with the likes of JP Morgan, HSBC, UBS, Credit Suisse, Deutsche Börse, all the usual suspects there, and from different areas of the world as well, into even, you know, more specific sort of physical market centers in Hong Kong or Istanbul or Dubai. And then really a lot of market intelligence was gathered from that stage. That was really our R&D phase, which then led to the building out of the system, the technological development of the system, and then plugging in our members of the ABX and finding partners such as Deutsche Börse So we've partnered up with the European Commodity Clearinghouse, which is a wholly owned commodity clearinghouse by Deutsche Börse. And that integration is actually still underway and set to come online this year, which will be very exciting, actually, because we plug into all the institutional members of the clearinghouse, which is like 450 institutions, to roll out this institutional level exchange. But along the way, we were keeping track of the developments and the maturing of blockchain and what that actually facilitated, which was effectively the peer-to-peer transfer and registry digitally of title of metals in a decentralized way. So basically I could transfer from one party to the next party that could be anywhere in the world, title of my metal and frame it up to be highly divisible and suitable as a currency. So that's as we watched the maturing of that market, eventually we thought, well, we got to further realize our vision here, which was one of bringing back gold and silver as a form of sound money. At the end of the day, if you're a monetary historian, and I've really sort of delved into the history of money, then you'll realize that gold and also silver have been, they've lasted the test of time and held their value throughout the ages. And there was quite an opportunity to marry like the oldest and the greatest store of value up against the latest and the greatest in payment technology, being the blockchain. So married those two together, but we didn't see that as enough because there's something that holds back gold as money or silver as money, and that's something called Gresham's law, which is bad money drives out good. So if I value gold and silver in a parallel monetary system over and above fiat currency, legal tender, then I'm going to want to spend in legal tender and hoard my gold and silver because I value them more. So we tried to basically formulate a way to induce the utilization of gold and silver as money and stimulate it. And so we came up with this yield system, which actually rewards market participants in the system to use the money. So we saw ourselves being successful if, one, we can actually mobilize funds, attract funds into our system, into our ecosystem, and then two, get them into motion, get people actually utilizing gold and silver as money. So we built out a multifaceted yield system that rewards holding the currency passively. So then that sort of frames gold and silver up as a mainstream investment asset to compete alongside bank deposits, dividend yielding stocks, property investments that have a yield. At the moment, before this Kinesis came around, gold didn't have a yield. In fact, it burnt a hole in your pocket. It had carry costs. You had to pay for storage, insurance, these sort of things. We stripped that away and actually applied a yield. So that makes us attractive in comparison to other investment assets, particularly these days where we're living in a world of negative interest rates or negligible interest rates. So that's one component. The next component is getting it moving within the system. And that's where we provided this sort of stimulus sort of overhang of rewarding users for using it. So spending, sending, or selling it. So we have like this minter's yield whereby if people create the currency and then send, spend, or sell it, they're rewarded for it. They're rewarded for obviously referring in other users, whether they be corporate or individual users. And there's a few other yields in there which are active yields, basically stimulate and reward the use of the system. So we've really built out a system that participants will enjoy the collective success of it, but also will be individually rewarded from their utilization of it as well. So that gives a bit of an overview there.
Well, no, I appreciate that, and it's a interesting and quite complex journey, and I think people will need to get their head around it. I've been looking at this for 2 or 3 weeks, and I have to say that it's complex because there are so many facets to it, right? It is an ecosystem you're talking about here, and I think that's really what's quite interesting. So we'll go into that in a bit more detail. But let me just go back to the gold question first and the precious metals question, because there is, of course, a difference between physically holding the gold or silver and allocated holding and essentially somebody else looking after it for you, right? And there's a lot of discussion now about whether the physical holding of gold or silver is the same as an allocated or, even worse, somebody else looking after it in an allocated base. Where on that continuum does Kinesis fit in?
So we hold people's precious metals currently under an arrangement which is legally allocated. So title is legally allocated to the ultimate beneficial owner and operationally pooled, meaning they don't hold a specific bar within the system, but they have legal title to a certain weight of of metal. So they're allocated and own legal title a certain weight of metal. Saying that, we are about to launch a legally allocated, operationally segregated facility as well, where people will be able to actually deposit in like their specific bars and coins and to digitally monetize it. So their accounts will be created with KAU and KAG, and they can monetize it. And there's certain specific mechanics around it. Yeah, it can be a little bit to digest initially because it is a big system, and there's a lot of mechanics you got to work through.
Right.
But we've worked it out. At the end of the day, we operate a diversified group in precious metals, and we've been moving metal around the world for a long time. Obviously, when it comes to physically holding it, I think there's nothing wrong with that at all. And I think, for a precious metal investor, I think it makes sense to be diversified and actually having some physical holdings of metal. They might have a good place to hide it sort of somewhere in their house or in a safe or dig a hole in their backyard or something like that. But with regards to obviously our solution, it's comprehensively insured. That we hold it on what's called a Bailey arrangement, which is a safekeeping arrangement, which means it doesn't sit on our balance sheet, it doesn't sit on our books. And that is obviously in comparison to, you mentioned an unallocated arrangement, whereby it does sit on a custodian's books and it is their asset, and you have basically an unsecured right to it. And there's a great deal of counterparty risk with regards to that. Whereas we contend that there's actually no counterparty risk, because if we fall over as an entity, then at the end of the day, the administrator would just simply distribute the metal holdings to the users, and they'd be free to either take delivery or liquidate them. So that's the difference.
Okay, no, I appreciate that, and it's important, I think, for people to understand that those gradations of ownership and storage are actually quite different in terms of characteristics and as you say, the risks. Now, when it comes to Kinesis, the thing that I think I come back to is it is a sort of a currency, but it's connected very firmly to the metal, right? But it is digital, right? That's the critical point, isn't it?
Yeah, it is digital. We increasingly live in a digital world, and to gain financial access, you really need to be in the digital world. Otherwise, we're operating through a physical system. And there's, like I said, there's nothing wrong with that. But what we're able to do in building out this digital system is provide that accessibility, the plumbing and the piping into the incumbent banking system. So you've got the on-ramps, the off-ramps, a fiat currency. You can transact on a debit card. We have a global virtual debit card where anyone from an unsanctioned nation in the world can actually open an account and utilize the virtual debit card, which effectively operates off your phone, like using Apple Pay, Samsung Pay, Google Pay. or in the United States, we have a physical debit card, and we're about to roll out our UK and Europe cards as well. And we're rolling around to Asia and Australia and other parts of the world as well. So operating digitally, it's sort of a necessity at the moment in the world that we live in, the interconnected digital world. And yeah, so there's physical there, but it's also digital. So you can't obviously create our currency unless there's physical metal actually sitting there.
Right. So the way I think about it is you have a digital manifestation of a physical instance. Right? Is that the way to think about it?
It's like a digital representation of your legal title to the metal, the physical metal. Yeah.
And then that's on the blockchain. So essentially what you've got is that security and immutability.
Yes, that's 100% correct.
Yeah. Okay. Now, so you've talked about a little bit about it's been around for a little while. It's growing. What's the current footprint? You mentioned several different geographies.
So, as far as users being able to sign up, like anyone in an unsanctioned nation in the world can actually sign up as a user. We have offices spread throughout the world. We're operating 24/7 these days. So we have an office here in Australia, in Brisbane, but we also have like team members spread across Australia as well. We're bringing on actually a new CTO based out of Australia, which we're excited to announce at some point. And in addition to that, we have offices throughout Africa, throughout Europe, like London in particular, throughout like Latin America as well, in Buenos Aires, New York, and the Middle East in Dubai as well. So we're spread across the world, and through the ABX we operate trading hubs. So they're these geographic trading hubs where we bring like price discovery and liquidity into these specific locations. And actually Kinesis utilizes the ABX trading hubs and trading facilities and storage facilities as well. So the ABX exchange and Kinesis are entwined and operating together as a team to bring this solution to market.
Well, I was going to say, having looked at this in some detail, it is quite confusing because you've got the B2B and you've got the B2C, you've got the institutional, you've got the corporate, and you've got the personal, you've got the digital wallets, you've got the debit cards. It's a very complex infrastructure and a very complex ecosystem. So how do you get it across to people so that they actually can get their head around it? I mean, I'll be honest with you, looking at the website that you've got there's a lot of material there, but it's really quite complicated to try and navigate your way through it.
It is. It's a lot to digest, but at the end of the day, we're, like I said, quite diversified. We face up against the institutional space. We have a trading house ourselves, a trading arm, where we are actually diversified even from the mining sphere into the smelting and minting sphere. We're moving metal around the world. And then we have like the front end interfaces into our institutional exchange to now Kinesis, which actually does face the retail investor. And also does face institutions. So partnerships and integrations into institutional platforms are a big part of our commercialization strategy. And even into, we're working with governments as well. The first one off the ranks is Indonesia, which is actually set to be announced in a press conference tomorrow, and then officially launched via an opening ceremony in May by the top ministers and I think even the vice president of the country, and it's listed as a project of national importance. And that's taken 5 years to build out, and it's effectively a parallel monetary system for the country with one of the major pillars being the post office with 58,500 branches. It's already, a cornerstone organisation in the payment industry in Indonesia, but they're operating on a largely physical basis, like physical cash being brought to the post office to pay for utility bills and so forth. And this is really sort of bringing them into the digital age and with all the efficiencies that come with it. So, there's a large population in the rural environment in Indonesia. Suddenly they don't have to, commute hours to get to a post office to pay for things or to send money somewhere. They can do it via a Kinesis powered application. Obviously it's all branded in, Indonesian branding, but that's really what we've worked on with the Indonesian government.
Yeah, and it's very interesting because that really is going after the unbanked, isn't it? And it's basically the the consumer end. But I guess the question is, so Kinesis isn't the same as a dollar, right? Or is it? I mean, are you manifesting this in the local Indonesian currency, or is it actually its own currency?
Well, it's gold at the end of the day. Right. It's gold, but then translated or converted to Indonesian rupiah. So you can see the rupiah value of gold. But say, for example, gold goes up in value against rupiah, then your holding, your currency holding, will actually increase in value in terms of rupiah, and vice versa in the Kinesis system up against other currencies. Mm.
Right, so you've basically got an exchange rate or a basis risk between gold and the currency.
That's correct.
Yeah.
That's correct.
Yeah. Okay.
I mean, we contend that gold's the true universal currency throughout the ages, and everything revolves around gold, right?
Well, Peter Schiff would agree with you, right?
Yeah, that's true.
And there's an interesting debate, of course, in the current evolution of the monetary system globally, with the quantitative easing that's going on around the world and the massive amounts of liquidity, right? What is the firm cornerstone of the monetary system, right? Is it the US dollar or is it gold? And there are many people who say no, it's got to come back to something like gold because gold is immutable and et cetera, et cetera. There are others, of course, who say no. That was then, this is now. We've got an alternative future that could be the US dollar or a digital replacement of the US dollar. Now, what I'm interested in is, do you see Kinesis potentially taking the sort of role that people like the ex-governor of the Bank of England spoke about a couple of years ago at Fox's Hole, effectively a digital solution?
Yeah, that's a really interesting question. And, if you ask a central bank governor, of course, they will say, no, we don't see gold as playing a major role in the global monetary system. But what's really interesting, what blockchain and Bitcoin and these cryptocurrencies has brought about is, I think, an awakening of the people to understanding that money isn't necessarily just fiat currency created by central banks. In fact, it can be money that's actually held and developed and held. The power is in the hands of the everyday person. And so I actually am thankful for the evolution of cryptocurrencies, because it's awoken people to understand this. You can have different forms of money outside of centrally bank created money. And of course, it's not legal title, but all you need to do is look at the escalating value of it to understand it's catching fire, it's catching on, and people are starting to understand this. And of course, what we've done, in the precious metal space as well, and then marrying that up against digital currency, which can be integrated and accepted by, merchants or all different kinds of organizations around the world in a really easy way. All they need to do is implement one of these digital wallets, and next thing they can start accepting it and using it. I see this being the way forward, and this is why we're doing what we're doing here at Kinesis. Obviously, I'm a proponent of gold and silver as sound money. I think, it's got the track record. It's lasted the test of time. You can't argue with it being the world's most effective monetary store of value. You just need to look back millennia. And cryptocurrencies, Bitcoin, they're something new. They hold, utility value and technological value. We've tried to marry them both together to create the best possible solution.
So how do you view the current disparity between the price of gold, which is, pretty going down slightly, and Bitcoin, which is going through the roof? It hit a record the other day, right? Does it seem to you that those two things are disconnected, or are they actually still connected?
No, I think they're definitely disconnected, albeit I think that the two assets, if you call them that, stand for the same thing, which is, personal freedom and liberty, giving the power to the individual. But, actually the price discovery mechanism is still caught up in the incumbent banking system, which is a fractional reserve system. And as such, it's subject to market makers from the banking space who, if they have an agenda to actually keep the price suppressed, then they can actually do that. I might sound a little bit conspiracy theorist here, but this is just a fact. That's really the way that it operates. And so that's I think the reason why you see precious metals still subdued in price, despite inflation, despite everything. And that's why I would say.
So do you think then? Do you think that the price of gold is understated at the moment? That it should be higher and it will go higher?
Yeah, certainly. All you need to do is look at the value of it historically in comparison to the amount of outstanding debt, the amount of outstanding money supply out there, and that basic comparison leads you to a conclusion that it certainly is undervalued.
Right, and then going back to the fact that Kinesis connects to the gold, therefore the value of Kinesis would increase as well.
Yeah, we're directly connected with gold, so we're one-to-one backed by physical gold. When someone buys a unit of our currency, they're actually buying a unit of gold or a unit of silver. Right.
Okay. Well, let me just sort of go into the detail a bit more here. So let's talk the consumer end first, right? So basically, you can transact using your platform and using Kinesis. There are fees and charges which are actually connected to transacting, aren't there?
Indeed, there are. But it operates differently. So for every transaction, there is, of course, a transaction fee. But where we operate differently is those transaction fees are immediately sent to our master fee pool, which accumulates over the course of a month. And at the end of each month, those fees are distributed to different users in the system. So Kinesis takes a share. We got to keep on moving forward and growing and building out our teams and building out our technology. But also other market participants in the system also take a share as well. So in accordance with what they do in the system. So if they're holding metal in the system, you'll receive a yield. Holders receive a 15% cumulative allocation of the yield, and basically it's broken up proportionally in accordance with your holding in the system. And then there's a minter's yield and a referrer's yield and a depositor's yield, and we're building out some other yields as well, which we'll announce in due course. But obviously the minter's yield operates in a way whereby if you basically buy the currency, mint it, bring it into the money supply. In our mint, we have another platform called the Mint, Kinesis Mint. Then you're actually adding to the money supply of the system, but you will not receive a yield until you send, spend, or sell it. So that is mobilizing the currency, sending it into the wilderness, out into the wild. And the way that we operate, you receive a perpetual yield from that. So if I was to buy and then at the Mint, $100,000 of KAU, and then on sell it, then I receive basically an entitlement to that $100,000 minted. And the best way to try to perceive it is to understand that once I sell it, then as that 100,000 goes from sort of one person to the next person to the next person, then I'm receiving a share of the transaction fees as it moves through the system. So that's why money velocity is really important. Everyone's rewarded more for more transactions. There's no debt associated with these yields. It's just transactionally based.
Yeah, so that's one of the distinctive value propositions, isn't it? This idea of yield, and effectively the more you use it, the more you benefit from it.
100%.
Yeah. Now let's then talk about how this might evolve, right? Because we've touched a little bit earlier on about central banks and central bank digital currencies. Of course, many of them are experimenting now with Ethereum-based central bank digital currencies, which would be digital dollars or, wherever, digital pounds. Do you see Kinesis effectively colliding directly with those, or will it live alongside?
I think we just live alongside. We're an alternative. We think that we provide value and rewards over and above anything else out there, and we can happily live alongside as a parallel system to legal tender, to other currencies out there. But we can also work with whomever as well. It might be central banks, it might be governments, to assist them in certain ways, and perhaps it's even, backing their national currencies with assets. And this has become more relevant these days. Particularly, there continues to be this sort of rolling, escalating currency a crisis going on around the world, which I think started around 10 or 11 years ago and hasn't gone away, just with all the debt in the world these days. And now COVID hasn't helped the situation at all, and governments find themselves in trouble. So quantitative easing is the name of the game, and basically budget financing. So,
and what do you think the biggest barriers that you have to overcome are? And are they regulatory, or is it just about adoption rates, or what is it? So offering spot physical allocated ownership of metal is not a financial product or security. So from that perspective, we fall outside of financial services or securities regulation. But, we have this whole banking component, which does fall within inside it. So the banking side does touch regulations around the world. We've actually tried to become the most regulated we can be, just because we see it as increasing our perception of corporate governance. We have an extremely robust corporate governance structure, but the more regulated we can be, the better, really. So we've chosen Liechtenstein actually as our headquarters. And Liechtenstein is the most progressive that we've been able to identify as far as robust regulation that touches the blockchain space. They've got a blockchain act that has been recently implemented, and we're regulated under that blockchain act. We're obviously regulated under KYC, like AML, CTF provisions, and anything touching the sort of banking side faces up against either partners or ourselves who are regulated in that space. So that's really where the regulation sits. So if I take Australia as an example, you wouldn't have an Australian financial services license because you're not lending, right?
No.
But you are.
We're not lending, we're not offering.
Yeah.
We're not offering a financial product.
Yeah.
But when we roll out our debit card here, then either we're partnering with a regulated entity, and with that comes a form of regulation ourselves, even around data protection and the way that data is stored and protected of users, and the way that we operate. But we see ourselves as an aggregator platform where we plug into different partners around the world, and they're the regulated entities. So we plug into, say, a bank here in Australia. They're our partner. We're just the aggregator platform, ultimately offering this service to our ecosystem and our users within our ecosystem, but they're the banking organisation that's regulated under the banking regulation here in Australia.
And that sort of comes back to one of my earlier observations, because there is a B2C element and there's a B2B element, right? And I'm interested that you see the B2B as effectively a way to reach through to third-party end users of the products and services. Of those two, do you have a preference for running more towards consumers or more towards business, or is it, go wherever?
Both are important to us. So, in going directly B2C and integrating into another organization, you're integrating into an already existing standing user base. And that might, count in the millions. So where it might take us 6 months to go through the process of onboarding and partnering with an organization, suddenly we're tapped into their user base, which is standing in the millions, whereby, you have to throw a lot of promotional and marketing PR dollars into reaching the end user and onboarding them. There's an acquisition cost. So both are important. We want to provide, great value and a strong service to both, and we're forever increasing our service that we provide and trying to make it more personalised to the end user, just even retail. But also we have a very strong strategy to integrate into existing organisations that have this already existing user base.
So take me forward, let's say 5 years. What's your vision for how this all plays out?
Well, ultimately, we're looking to build like this super ecosystem, which is a monetary system. On the other side of every transaction is currency movement. So it's sort of like the largest, I guess, business model that you can conceive, because it's a monetary system, it's a commercial system. So we can plug in and bolt on all different kinds of services. We see ourselves actually becoming more integrated in the banking, payment, and financial space, and we'll build out, accessibility to new services, new solutions, and new products. That's a really important sort of part of our development and developmental strategy, but also, to complete the circle as far as being a monetary and payment system, we need to interface into merchants, into payment providers, and all these kind of partners as well that need to be introduced into the ecosystem.
And you mentioned earlier on, the postal connect in Indonesia. I'm interested, of course, because in Australia we have the Australia Post debacle going on at the moment with Christine Holgate, and there's an interesting observation there that there is actually a potential for Australia Post to do more in the, in the banking sector. And I'm just thinking, well, there's an interesting connection point potentially.
Yeah, we should reach out to them.
Yeah. Well, when you find out who the CEO actually is. Couple of quick questions then. Did COVID actually change your strategy or make you do things differently, or did you just sail through?
It didn't slow us internally down, because our team was well set up to work remotely and just connect remotely around the world. But where we did notice it was with third parties. And Indonesia was an example. It really slowed down Indonesia, and our project there is just an unfortunate circumstance. But also with some other third parties around the world, moving from the office environment where, they might have had their team to then working remotely. They caused disruptions. That caused disruptions to our third parties. So there was a little bit of a slowdown, and a few projects were delayed, I would say. But we've pushed through. And we kept on pushing with these projects, and we're getting them over the line, or got them over the line.
Yeah, and it's interesting because you've got a pretty much virtualized team. I mean, I've been talking with people from the UK and et cetera. You're here based in Australia. So you really do have this sort of more global footprint in any case.
Indeed. Yes, we do.
Now, I've got one last question. Kinesis, where did the name come from?
So, yeah, that's an interesting one. This goes, kinesis is the unidirectional movement of something resulting from stimulus. Now, as I was sort of mentioning at the very beginning, that we see ourselves overcoming and reversing Gresham's law, which is that the whole thing. If I value one currency over another currency when they're in a competing system, then I'm going to hoard the currency that I actually value more, and so it stops to circulate. So we've overlaid this like stimulating engine over the top to get it circulating and to get it moving. So that's really where it comes from, and that's really where our success lies, I believe, in actually getting money moving, and it's working. To date, we've had over $3.5 billion in transactions. Last month, we had $1.3 billion in transactions alone, and we're attracting capital in. I think we now have 1.3 billion ounces of silver in the system, and around 600 kilos of gold, and it's exponentially increasing. So things are working, and as we launch new services within the system, I think they're going to work better and better, and people will become more incentivized and as such then rewarded for their participation in the system.
Great. Well, I appreciate your time today. I certainly found it very interesting. And we will circle back because I do think this is an important dimension to watch. You know, there are so many connection points about, the question of the future of money, the question of digital, how it all plays out. And the fact that you've got those faces towards consumer and faces towards business, I find, really, really interesting. So we will definitely pick up the conversation again. If people want to find out more about Kinesis, where do they go?
So visit our website, kinesis.money. The system, it's a monetary system, right? So it's a lot to digest, but we've got the information there on the website, and we've got videos and webinars and everything like that people can get absorbed in, and we try as best as possible to step everyone through sequentially, step by step, so they do understand it. And obviously they can sign up for an account and start testing things out anytime they wish. So that's really it. And I thank you very much for your time, Martin.
Well, Tom, I've enjoyed speaking with you. Good luck with what you're doing, and I look forward to following up with you down the track.